Meanwhile, we're back with Brooke for another conversation, this time one he's brought to us, why the recent rebalancing of an influential tech index could give a boost to shares of NVIDIA and put downward shares on Apple. What's going on?
So, ETFs are governed by the Securities Exchange Commission, and they have some rules. They basically say that companies in an ETF can't exceed 25% of the ETF. And well, if you take a look at the grandfather, the big company of the ETFs in technology, that's XLK, the Spiders Fund, and it's got $72 billion. So right now it has 22% in Microsoft, 22% in Apple, and 6% in NVIDIA. So it's underweighted NVIDIA.
When's the last time it was rebalanced?
It's rebalancing as of today.
Right.
So it's rebalancing, rebalances every quarter through Friday. So it's rebalancing today. So what has to happen is they have to make some adjustments. And because of some rules there, NVIDIA is now the largest company. And so it knocks Apple off that spot. So it's going to go from 6% to 22% of the fund. And Apple is now going to go down from 22% to actually 4% of the fund. So those are some big allocations. So investors probably have been front running this, trying to get ahead, which could have been providing the boost because they knew this was going to happen. Those are some pretty big numbers if you do the math. It's around $11 billion.
This could be a factor in the recent run-up we've seen in these shares, is what you're saying?
Yes, more so with NVIDIA as well. And the other implication is down the road, now XLK is going to be more torquey. What I mean by that, because NVIDIA is going to be going from 6% to 22% of the fund.
Yeah.
And it's not just XLK, but there's other technology funds, ETFs.
That was my question. This rebalancing of the index will affect quite a number of technology-based ETFs, right?
Absolutely. So they'll be forced to make these allocation changes as well. And then, so the underlying composite of what's happening is going to change. And Apple tends to be less volatile than NVIDIA. So now there's going to be some increased volatility within XLK and other technology ETFs as well. So investors should know this, that the composition is changing, because those are some pretty big shifts taking place because of some internal rules and how it works.
I find it interesting that NVIDIA, that this index was rebalanced just one quarter ago, and yet the numbers are so out of sync. This is a consequence of the huge run-up we've seen in NVIDIA's share price over the past quarter, correct?
Yeah, so the way the rules work is that each security can't exceed 25% of the fund. And so they have a little bit of a buffer, so they're using 22% right now. And all of the funds above 4.5% allocation can't add up to more than 50. So all of a sudden, NVIDIA is just bumped to the top of the list. So they have to make that big change. We're usually making these small little changes taking place. So it is a bit surprising. It's just the way it works and how they're governed by the rules that are set up to manage the ETFs.
What are your thoughts on an investor investing in an ETF that has a couple of different stocks with such heavy weightings?
Well, I mean, you should always know what ETF that you're investing in, and that can be a good thing. XLK is the top performing major sector ETF in the market, so it's not a bad thing at all. But you should just understand what the constituents are, who the constituents are, and what impact they're playing as well. XLK is not the only one. We see that with XLY as well. We've got large positions in Amazon and Tesla. So, you know, if you fundamentally don't believe in a certain company, it's got a large weighting, you might make some investment choices that are a little bit different.
What are your thoughts on investing in tech through an equal-weighted NASDAQ ETF that diversifies you away from big holdings in a particular stock?
Well, it just depends on the market, because right now the equal-weighted would be underperforming the cap-weighted right now. So you would have been really looking and saying, "Hi, I own technology, and I keep hearing technology is going up and up," but it's really been just a few stocks that have really been pushing it. So there are times, I think, to own an equal-weighted ETF, and there's other times to actually own a cap-weighted ETF, but the market has just been gravitating toward these few stocks. So the better play up until now has been the cap-weighted.
Apple stock is interesting, isn't it? Apple stock there was all kinds of worry about its iPhone sales until recently, and that stock has taken off. And I read today that a lot of people who watch Apple stock are worried about its valuation. It's now trading, and I'm going to check in on it right now, at about 30 times expected earnings. And people who have watched Apple stock closely over the years say that that's a multiple that it has struggled to maintain over the years. It's now trading at 32 times expected earnings.
Yeah, so I mean, the most recent bump with Apple, if you take a look at the chart, has been because they came out with this AI platform. And so anytime you mention AI right now, you just get an automatic bump. So it really comes down to how well is it going to be executed and how well is it going to be absorbed by the market. There's a lot of companies that aren't making the headway that's expected. My personal belief in this is with a technology like AI, in the short term, it's overestimated the impacts. And in the long term, it's underestimated. And that was true with the internet back in the 1990s, going to the 2000s as well. We saw this overestimation in the short term as how it's going to affect companies. And I think that's a little bit what's playing out here. So we're seeing this really bump if any company mentions AI, and any one of the larger companies in particular. So the most recent bump with Apple has been because of its AI platform that it's just come out with.